Joe Kraus has been on the show before in his capacity as a partner at GV, Google Ventures. Why him?
Well, Joe is already pretty involved with Lime. As you mentioned, he is a partner at GV, which led the most recent fundraising round at Lime. They invested $335 million, put Lime at a valuation of over $1 billion. And Joe told me when I talked to him yesterday that he's pretty much already working full time trying to get the company to sort of keep up with its own growth. And so it was sort of a natural development of his role that he would move over there as COO.
So, he talked about how he sees this as more of a transportation provider, not just a scooter provider. What does that mean? Does that mean expanding beyond scooters?
Yeah, Lime actually started as a bike company. So they have bikes, pedal bikes and electric bikes. They are also looking to get into something called transit pods, which are kind of like sort of miniature cars that sort of underpowered. You would only use them for short rides. They're also looking into car sharing. So unlike Bird, which is really entirely scooters, that's Lime's main competitor, Lime thinks that it can sort of bite off chunks of wide range of modes of transportation.
Now, there's clearly been a rush to invest, but I wonder, are these scooters going to be like the next Segway or the next Uber? Which is it?
Well, a lot of people are betting that they're going to be the next Uber. You will definitely hear a lot of skepticism as well that they could be like Segway. I think that it's hard to tell at this point. There's a lot of excitement about them. On the other hand, it's very clear that a scooter is not really going to replace your car. There are some real big questions about what happens in the winter, what happens if you have to carry anything. That these companies are basically saying, oh, we'll figure things out.
Right. What happens if you're wearing a skirt and you're wearing high heels
Exactly.
and you have a big bag? Hello. So talk to us a little bit about the business model. These rides are only $2 each. Can this really be as profitable as investors hope?
Yeah, so the case they will make for these things being very profitable is the scooters are not very expensive. Unlike Uber, you don't have to pay a driver. If someone's getting on it and driving themselves. And so they're also very popular. Most scooters are getting used basically until they run out of batteries every day. And so they can recover the cost of the capital investment relatively quickly. On the other hand, the scooters are really getting beaten up. They don't last all that long. Most of the companies don't want to talk about them. There was one report that said in Washington, D.C., they're only lasting, maybe 3 weeks or so. That's pretty, that should be pretty bracing. And also, as these scooters aren't staying out on the roads very long, it also raises some safety questions. If these things are sort of falling apart from day one, are people really going to feel safe riding them?